G'day everyone, welcome back to Pete's Investing. Today is April 13, 2023. This is the spot gold price update. As you can see here on our daily 4-hour and 1-hour timelines, we're all in a bullish momentum, although the hourly is starting to weaken and it's fluctuating up and down along that moving average, which is a potential consolidation slash weakening event. We need to see a break above this key resistance, and I'll drill down to each of these. First off, on the daily, you can see there, just zooming out, we've got this key diagonal ascending trend line. That's far off from being hit at the moment. We've also got this support line at 1809, and it's made a nice little advancement since then, and now it's hitting this 2032 resistance area, and it's bounced off that twice already. So just got to be mindful of potential downside from here. As you can see there, that CCI is starting to potentially maybe weaken and come back towards its moving average. On the 4-hour chart, I've also drawn these diagonal trend lines. You can just zooming out, you can see there amongst those highs and lows, and it's currently in this wedge at the moment. So we may come back and sort of rest below this or near this lower ascending trend line, but we'll see how it goes in the coming days. Also, you'll notice I've drawn this Fibonacci retracement, and that's hit our 61% level, which is a key area of potential reversal or even potential continuation of the current trend. And in this case, it continued the current trend to the upside. So always be mindful of that. You can always bounce off any of these retracement levels, but especially if it goes below the 61%, there's a high probability that it will continue to the downside. So anyway, moving up from here, it is bounced off at the 61% Fibonacci retracement and heading higher. Now, also on the hourly chart, let's look at what it's done there. That's that previous Fibonacci retracement. I've also drawn this more recent Fibonacci retracement from 1981 to that high, a recent high, and you can see there it's bounced off the 50% and made some further wick to the downside towards the 61%, and it's bounced up again from there as well. So again, if it breaks below this smaller time frame, if it breaks below that 61%, just be cautious. It may come back and rest on this lower ascending trend line. But to be more confident about going long, even though all three timelines are showing bullish momentum in the CCI, that's a good sign for long positions. I'd probably suggest wait until it breaks confidently above this resistance area to be more bullish and taking long positions. No short positions to be taken at this stage. To understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like us on Patreon, and we'll see you in a future video.